Hello, this is Dr. Vasant Boraste from Department of Commerce, KTHM College, Nasik. Today, I am going to discuss with you about the corporate accounting first chapter, that is Accounting Standard 21 for semester 3 of SYBCom. Let us start the Accounting Standard 21. The name of Accounting Standard 21 is Consolidated Financial Statement. First of all, I would like to recap that we have already discussed about introduction of accounting standards, its applicability, and accounting standard 5, that is net profit or loss for the period, prior period items, and changes in accounting policies. The video of this AS5 is have already been posted on YouTube as well as on the KTHM e-learning app. You can see that video. Later on, we have discussed about accounting standard 10, that is property, plant, and equipment, which is the most important aspect or accounting standard is AS10, on which there will be an example for exam also for calculation of assets, that is depreciation as well as assets valuation, cost of assets. So this is also we have discussed. We also discuss about some practical example about AS10, then we discuss about AS14, that is accounting for amalgamations, and the practical example of amalgamations we have also seen. So when there is a case of two companies going to amalgamate, at that time what kind of precaution should be taken over, we have already discussed in the last video also. Now let us concentrate on AS21, that is consolidated financial statements. Its applicability is there. Accounting Standard 21 deals with consolidated financial statements. Second one is it is issued by the Institute of Chartered Accountants of India, that is ICI, which is very well known now. All of you should be aware about this ICI. Then it is applicable to group of enterprises under the control of a parent. What is parent company and what will be the holding company, we will discuss later on. This standard should be applied in accounting for preparation and presentation of consolidated financial statement, that is CFS. This standard, that is S21, is applied in accounting of for investment in subsidiaries in the separate financial statement of a parent. So, what is AS21, that is consolidated financial statements, and what are the objectives of AS21 we have to discuss. So first one is to lay down principles and procedures for preparation and presentations of consolidated financial statement. This is the first objective, that the principle and procedure for preparation and presentation of consolidated financial statement is most important. Second one is the statements are intended to present financial information about a parent and its subsidiaries as a single economic entity to show the economic resources controlled by the group or obligations of the group and result the group achieves with its resources. So these are two objectives of AS21, that is consolidated financial statement. Now the scope of AS21. Here you can see the AS21 is applicable in following cases. First one is group of enterprises under the control of a parent and investment in subsidiaries. So these are the applicable, or we can say scope. And some cases are excluded from AS21, that is amalgamations and investment in associates as well as investment in joint ventures. So these are three cases which have been uh, excluded from the accounting standard 21, that is consolidated financial statement. So this is the applicability, or we can say applicable the enterprises to whom it is applicable. Let's see the definition of parent company. As I earlier mentioned that some features are, or we can say AS21 is applicable and laid down to the parent company, that is it is an enterprises that has one or more subsidiaries. As you know, the holding as well as subsidiary company, in that case that holding company is a parent company. So it is enterprises that has one or more subsidiaries, and the companies which have been held by somebody else, that's a holded company, or we can say subsidiary company. Second one is subsidiary company. It is an enterprises that is controlled by another enterprises known as a parent company. Say for example, a very simple example I always use, that is big fish and small fish. As you know, big fish always eat small fish. In the same way, big fish parent company is a big fish, and subsidiary company is a small fish. So group of small fish, or we can say group of small subsidiary companies, are controlled by big fish, that is parent company. So it is an enterprises that is controlled by another enterprises, or we can say company, known as a subsidiary company. So this is definition of subsidiary company. It is enterprises that is controlled by another enterprises, known as subsidiary company. Third one is most important concept in this chapter, or we can say consolidated financial statement, is minority interest. In case of holding and subsidiary company, minority interest part plays a vital role, and it you can see here refers to the portion of subsidiary corporation stock that is not owned by the parent corporation. Say for example, yes, I am explaining one example about that. Say for example, A Limited was there, and A Limited is held by B Limited. So there are 1 lakh shares of A Limited. About out of 1 lakh, 60,000 shares are held by B Limited. So that is holding company B Limited. In this case, B Limited is holding company, and 40%, or we can say 40,000 shares are held by B Limited persons, or we can say a minority, because here 60% share is held by a holding company or parent company, and the 40%, that is minority part, is held by that minor person, or we can say a subsidiary company. So in that case, minority interest is that refers to the portion of a subsidiary corporation stock that is not owned by the parent company. As I earlier mentioned, the case of A Limited and B Limited, the share of A Limited 60,000 is owned by uh, out of 1,60,000 owned by B Limited. So that is parent share. But 40,000 share is not owned by the parent company. That means that 40,000 is called as minority interest. Minority interest is that part of the net result of operations and of the net assets of the subsidiary attributable to interest which are not owned directly or indirectly through subsidiaries by the parent. So this is the definition of minority interest, subsidiary company and parent company. Now let us start the control. As you know, the parent company control the subsidiary company. A group of parent is all, and it's all subsidiaries control. So control in what sense? The ownership directly or indirectly through subsidiaries of more than one half of the voting power of an enterprises, to whom we can call as a parent company the company who is acquire, or who is control more than 50%, that is 51% share. So in that case, we can say that company is a parent company or holding company. At that time, the ownership is directly owned by the parent company. So here, or subsidiary, or indirectly through subsidiaries of more than one half, that is one half uh, of voting power of an enterprises. Control of the composition of the board of directors in the case of company, or of the composition of corresponding governing body in case of any other enterprises, so as to obtain economic benefits from its activity. So this is the control portion of consolidated financial statement. And the case where goodwill or capital reserve generate. As you know, the holding company should eliminate its cost of investment in each of its subsidiary, and if cost of investment is greater than holding shares, if in case there is a goodwill, and if cost of investment is less, then that time, at that time, there is holding equity share, that is capital reserve. So these are two completely contrary concepts of goodwill and, or controversy concept of goodwill and capital reserve. So keep it in mind, the cost of investment is greater than the holding share. At that time, there is goodwill. Say for example, holding company investment is 1 lakh, and the cost is and the holding company's equity is 80,000. So 20,000 is goodwill. But if there is a cost of investment is 1 lakh, and holding equity is 1 lakh 20,000, at that time there will be a capital reserve. So this is the procedure of consolidated financial statement. As I earlier mentioned that if cost of investment is greater than holding share is equal to goodwill, so and if cost of investment is less than holding shares in equity, then there is a capital reserve. So this is the complete clear case. You can see here that the computation of goodwill or capital reserve is there. A minority interest, already I have explained the definition of minority interest. Minority interest in the net income of consolidated subsidiaries for the reporting period should be identified and adjusted minority interest in the net assets of consolidated subsidiaries and should be identified and presented in the consolidated financial statement. So, consolidated financial statement should be prepared using uniform accounting policies for like transactions and other events in similar circumstances. So, this is the procedure of CFS. Now, discontinuance of consolidation, the results of operations of subsidiary with which parent subsidiary relationship ceases to exist are included in the consolidated statements of profit and loss until the date of cessation of the relationship. The difference between the proceeds from the disposal of an investment in the subsidiary and the carrying amount of its assets and liabilities of the as of the date of disposal is recognized in the consolidated statement of profit and loss as the profit and loss on the disposal of investment in the subsidiary. So this is discontinuation of consolidation. This part is not uh, as per the what we can say requirement of this IS. An investment in enterprises should be accounted in accordance with the IS 13. So these are some things which are discontinuation of consolidation. Accounting for investment in subsidiaries in parents' separate financial statement. In their separate financial statement, investment of in subsidiaries should be accounted for in accordance with IS 13. Disclosure should be the consolidated financial statement should be disclosed by way of note all subsidiaries including the name, country of incorporation or residence, proportion of ownership interest, intergroup balance, and the transaction and resulting unrealized profit should be wholly discarded. The financial statements used in the consolidation would be drawn up to the same reporting date. The consolidated financial statement should disclose the following wherever applicable. First one is the nature of relationship between the parent and the subsidiary. Second, the impact of acquisition and disposal of subsidiary of financial position. And the name of the subsidiaries of which reporting date is different from the that of the parent and the difference in reporting dates. So these are the disclosures which are required. And with this, I would like to say thank you very much. And AS21 is complete over here. As I earlier mentioned, all the accounting standards we have discussed in the last some videos, where AS5, 10, 14, and 21. Now we will turn to the company final account. Thank you very much.